I think anybody that's in gold and silver right now is well aware that gold and silver have both been trending downwards and quite a bit for the last few months. In fact, every time gold or silver seems to show any life whatsoever, the very next day it seems like it drops once again. Right now, silver is sitting just under 19, gold is sitting just under $1,650 per ounce. So definitely lower than where it was just a few months ago. So what I want to talk to you about in today's video, and we are going to have a special guest to do this, and no, this is not a sponsored interview. I just love to have Lior on. This is Lior Gantz from Wealth Research Group. We like to have him on about once a quarter and talk to him about the market, about gold and silver. Lior is very much an investor in gold and silver and other commodities and has a wealth of experience that I love to be able to bring to you on this channel. So let's get Lior in here, but really quick before we do, if you haven't done so, don't forget to subscribe and don't miss out on your chance to win some free silver. We are having our biggest silver giveaway ever when we hit 100,000 subscribers. So help us get there, and now let's get Lior in here and see what he has to say. Hey everybody, welcome back. Today we are joined by my friend Lior. We've had him on the channel a couple of times over the last year, and I am happy to have him back. Lior, welcome to the channel. How are you?
I'm doing well. How are you doing?
I'm doing fantastic. Right now, Lior, I think it's a really good time to have you on. Always excited to have you here. You have a lot of insight. This is, I love hearing from you. But right now, let's talk about what just happened. So we just had the last FOMC meeting, another rate hike. Today, gold and silver have plummeted quite a bit. Can you kind of deep dive into what's going on there?
Absolutely. I think what's happening with all asset classes around the world is they're digesting and accumulating to the end of the zero interest rate policy era. For the longest time during this first half of 2022, the consensus on the markets, if you speak with any fund manager, when I spoke with my fund manager, when I spoke with fund managers of the REITs that I'm invested in, they were all talking about how the Fed is going to raise rates, hike them, and then get to a point and then immediately pivot. And that pivot is now understood to be a fallacy. It's not clear 100%, but the consensus is definitely changing after Jackson Hole and we just had the September FOMC meeting. In fact, if you look at my name down there, it's and you see wealthresearchgroup.com/ZIRP. ZIRP is an acronym for Zero Interest Rate Policies. That's a special report, like a download PDF report, going over all the reasons why you should really understand that everything you own and hold and want to buy, sell, etc., has to be digested through this lens that interest rates are not going back to zero in this business cycle. And all of my insights and analysis are in there if you want to check it out. But the bottom line is that in a world where bonds are all of a sudden fair game, and that you can literally earn over 4% lending money to Washington for a 2-year bond, then this creates a whole slew of new options for investors, retirees, pension fund managers, etc. And as you know, gold is a cash alternative. And if for the next 2 years you can earn 4% with a government bond, a lot of institutional money is moving out of gold and moving into said bonds because they provide a real return, obviously below inflation, but with stocks going down 20-30% to earn 4% fixed, even with inflation, that's not a bad proposition. And then if you look at silver, I think what's really hurting silver is how strong the dollar is. Silver is way more correlated, or inversely correlated, I should say, with the dollar than gold is. Sometimes gold and the dollar rally in tandem as a safe haven. Sometimes they go down in tandem, but silver and the dollar, if you plot them on top of each other, whenever the dollar is strong, or I should say even more accurately, whenever the euro is weak, silver is weak. If you plot silver and euro for the last 22 years, they're almost a mirror image. So I would say that's what we're looking at. And as long as this war in Europe is on people's minds in terms of, hey, the first recession, the first classic recession, the first waves of layoffs and everything like that will come from Europe, silver is going to be under the gun. So, in my opinion, I'm looking at around 1,400 gold for the major bottom of the cycle, and around 15 to 13 on silver for the bottom of this cycle.
13 to 15 on silver and 1400 on gold. It's not the best outlook right now. So, do you think people should wait to invest in gold? I mean, should they keep their money in cash? Because you just said yourself the dollar's looking strong. There are people keeping money in cash as a safe haven at this point.
It just depends on what you're doing. So if I put my hat on, I have a couple of hats. If I put the hat on of a physical silver and gold accumulator over the remainder of my adult life and then passing it on to my children, then 1,400, 1,500, it means nothing. What counts is how many ounces you own. And I think every person should just get to a number. He should just have a number where he's comfortable with. How many ounces do you need to own in order to feel like this is a sufficient a physical position? For me, it's always been 2 years worth of my living expenses, not my personal ones, but as a family unit. So if the family unit spends $5,000 a month, as an example, then I would need $120,000 in physical gold to be satisfied. And when that number drops below 5% of my net worth, then I need to raise it to 5% of my net worth. So it's either 24 months or 5% of my net worth. And I don't need more than that. Okay. So for me, if whatever happens, that's good enough. If it's already fully allocated, then I don't need that. I need the other hat. And the other hat is the silver hat. The silver physical, the physical silver hat is more about getting to a point where I only accumulate between 13 and 16, which is the median price of mining around the world. That's where I know that I like to get the physical. You'll notice if you call a bullion dealer right now that you'll pay way more than that, way more in spot for your silver. And even if you try to sell it right now, you'll get way more than spot. So there are two markets here. There's the physical, and then there's the COMEX. So I just showed you the two hats in terms of accumulation, and I will never sell. In other words, the plan with physical gold is to never sell it. And then as the other hat is that of a classic commodities boom and bust cycle. And in a boom and bust cycle, in commodities, you want to buy low and then sell higher. And when you do that, or when you attempt to do that, I think that the best thing you can do is go easy on the way down. In other words, catch a few fallen knives, but make them, the really small ones, and wait for that uptrend. So once that uptrend is confirmed, then you haven't caught the bottom. It doesn't matter. In the big picture, if you caught the uptrend after a huge bust cycle, the potential in commodities has been huge. I can tell you about, for example, 2009 until 2011, which was a huge cycle. I didn't obviously catch the bottom. I started investing around 2010, and I can say probably I put in my money in about 8 stocks. They all either doubled or tripled, quadrupled, etc. There was never one that went below the return was below 100%. And I didn't sell because you have to realize also what you're getting into. If you are in a commodities bull market after a huge bust, the re-rating is incredible. So I think if you're thinking about that, right now is the time to be very, very gentle, very easy. You know what you're doing, and just wait for that bottom and confirmed uptrend to get more aggressive. It may sound different than what you want to do, right? You want to be aggressive on the dip, but not with commodities in a bust cycle, because you just don't know where it ends. So that's the second thing I want to tell you. If you look in general at where we are now getting to a point where Powell told us that he wants to get to a real positive yield across the spectrum, across the curve, from the 2-year to the 30-year. He wants positive rates. That is very, very high rates compared to what we've had in the past 2 years here. So if that's happening, I think that's really interesting because here's the thing: even after they are now aggressively tightening to the tune of the most aggressive tightening since Paul Volcker, and it doesn't matter that they're not raising it to 20%. It's not what's important. The world doesn't work at 20% anymore. America is not in the 1980 America where it was the largest creditor nation in the world. It's now the largest debtor nation. So don't expect it to be like that. We in terms of measuring tightening conditions in the economy, we are as tight as in the days of Paul Volcker. So they're now really tight, and even after that, rates are still not positive. So just think about how important that is for gold. If they stop raising rates next year, then you will still be in a point where you are in negative real territory. In other words, when you adjust for inflation, and that's huge. That means we're almost in a permanent environment of negative yields. And when they start to lower rates, man, that is the mother of all cycles. In this cycle, and once the bottom hits, in this cycle for gold is probably going over 3,000, and silver is going to go above the 50 as we enter into the later stages of this bull market. The setup is incredible in terms of the fundamentals that are very inflationary for this decade.
Okay, so when do people know when the bottom is? If they're supposed to, if you want them to wait, not you specifically, but if they wanted to wait till they believe that they're at the bottom, when do they know that?
Well, obviously a bottom is in hindsight, right?
Right, of course.
That's when the last settlement happens between a buyer and a seller, that nobody's is willing to pay less. Nobody's willing to sell for less.
I mean, obviously, I don't expect you to hit the nail on the head, but roughly,
yes.
You know what I mean?
Yes. Yeah, exactly. So I'm just after clarifying that the bottom is a point where it's only known in hindsight. What I think you should look for are the telltale signs. So when we look at the last bottom, and I don't know how, but I was able to buy 50 gold eagles the last time gold made a major bottom. This was September of 2018. Gold bottomed around 1180, and I picked up 50 gold eagles at 1200. Now, what happened? One, there was a massive one-day drop. In other words, there was a flush where you literally saw anyone that needed to get out got out. It was almost like, I think, between 80 and 100 ounces and $100 in one day. So look for a big down day. That's the first sign. Secondly, if we look at the last bottom, it was at $1,200 an ounce in 2018, and then you had the other bottom in March 2020. So I like to compare bottoms to historical bottoms, right? Because usually gold goes towards those bottoms, and then there's a lot of buyers that are interested in gold around those levels.
Right.
So I think for gold, there's a real bottom in the 1400s. There's a real demand for gold at those levels. If we look at what's called the median mining price around the world, it's around 1100. So there's a premium that people are willing to pay above the mining cost because of the way that and how unique gold is. So to me, if we see gold retreating to around 1400, you're going to see a lot of buyers there. And then you look at historical bear markets for gold. Bear markets for gold or major corrections for gold are between 40 and 50%. If we take the all-time high around 2100, and if you take 40% from there, that's around $800 an ounce. So you go to the 1300s. If you take 50%, which is a major bear market, which I don't think we're in right now, but if we take a 50%, that's going towards the 1100s, and I just don't see it that way. We are not in a classic bear market for gold at all. We are in a deep reset for the prices of every asset class in the world. In other words, a bear market for gold is a bear market for gold. So there's a fundamental reason that just gold is dropping. It's a bear market. We're not in a bear market. Everything around the world is dropping in price because of the tightening of liquidity, the tightening of credit, the risk averseness, and the rise of interest rates. Everything, right?
Mm-hmm.
Apple, Microsoft, Amazon, you name it. So it's not a bear market for gold. It's a reset of asset values in general. So in that scenario, like I said, the people that are now in cash and are putting their bids in, I think a lot of bids are going to come in at around 1,400. So to me, that's a very good price to be a buyer at.
Okay, that sounds good. And silver, you said somewhere between 13 and 16. Is that right?
Yes.
Okay, makes sense. And Lior, with that, that is all the questions I had, but I do want to give you an opportunity to talk about Wealth Research Group. And additionally, I will have links in the description below. Do you want to give us a little bit on what you do?
Yeah, wealthresearchgroup.com is a free financial newsletter where basically we cover everything that I'm reading and understanding and chatting and analyzing. I write it for myself as insights, and then I actually publish those 3 times a week. So when I speak to fund managers, CEOs of companies, other investors, etc., and read my own thing, that's basically what you get. And also, if I actually am interested in specific opportunities, I also share them. I did want to tell you though, on top of that, on top of being subscribed being the best way to just follow us. If anyone on this call does not know Malacca or that area of the world and how significant it is to us in the 21st century, I definitely encourage you to download wealthresearchgroup.com/Taiwan. It's 20% about Taiwan, 80% about Malacca. I think it's really important people know so that when they hear it in the news, the alternative media, anywhere, when they hear the word Malacca, they are paying attention because that might be the ground zero for the first physical altercation between China and the United States in the area of the South China Sea.
Okay, I will, and I will put a link for that in the description below as well. So, guys, make sure you check that out. And Lior, once again, as always, it's a pleasure to have you on here. Thank you so much, and I'll look forward to talking to you again next quarter, if that's okay.
Thank you very much.
All right, have a good one.